Welcome, everybody. This is Geoff Dohrmann from Institutional Real Estate, and this is our quarterly update with Dan Dierking of NCREIF to help everybody understand some of the things that NCREIF is doing to help spread the word a little bit. So welcome, Dan. Glad you could be with us today.
Yeah, thanks for having us again, Jeff. Appreciate it.
Yeah. So what's new? What's going on? What are you working on at NCREIF these days?
Yeah, well, NCREIF being a membership organization, we're nothing short of long lists here of things to accomplish. So we kind of look at our initiatives in a variety of ways. Certainly, we look at different products that we have going on, which we can talk through. We've got technology projects going on. And then, of course, there's a variety of different member initiatives and committee initiatives that are taking place. Some of the key projects, certainly, if we just think about products here for a second, NCREIF's foundation is built around data, everything from property level to fund level, and that is certainly continuing. One of the main things, though, that is taking us a little bit outside of our normal equity products is we are getting involved in debt. Debt is a big asset class that continues to grow, and we've been working with a lot of different members and really non-members who are interested and want to have some sort of index, some sort of aggregate for them to measure themselves against those debt investments again. So we've had a debt aggregate. We've been working with CREFC for a few years now, and now we're getting ready to actually produce a couple different aggregates. We're looking at a core yield, a moderate yield, and a high yield. So we've spent a lot of time with the industry trying to understand what those different indices would look like, and I think we've got a good set of requirements that will allow us to pursue those indices. So that's certainly a big one for us.
And how many members of NCREIF are involved in this initiative and putting this together?
Yeah, so NCREIF is almost 500 members, and that's split between investment managers, professional members, investors, and then academic. We probably have, close to 25 different investment managers involved. We've leveraged a handful of professional members. We've talked to consultants, we've talked to administrators, and then we've also talked to a variety of investors. So all of them have provided input into this in one way or another. Not to mention, like I said, we're working with CREFC, and they actually have access to just traditional debt managers. Debt managers
What is CREFC? What is CREFC?
So CREFC is another association very similar to NCREIF, but they serve the debt side of the business. So they hold different debt conferences. They have debt education, debt committees, and they've been able to help us out with getting access to a lot of other managers as well.
And how many initially, when you get the product designed and ready to start tracking, how many loans will typically be involved in the original index, do you think?
Yeah, so we'll start at the fund level. So today we have inside of an aggregate, we're calling it an aggregate because it's really just a conglomerate of different funds. The debt world is very complicated. There's the structures and the different vehicles that are out there service different investors. So we call it an aggregate because it's really not a true peer set. That today is 17 funds. And that's about 4,000, I believe, 4,000 individual loans inside of that. We're going to focus our efforts on the moderate yield index first. That should be around 11 funds, and we'll have about half that from a loan level perspective.
So will investors be able to benchmark the performance of their investments in funds against this benchmark? Is that the
Yeah, yeah, that would be the goal, right? I mean, if you look at what NCREIF and the industry has done with Odyssey and provided the equity world with a real solid benchmark where you can understand what's in it, you understand the inclusion criteria, you understand how it's governed. The goal would be the same for the debt index. There really isn't much out there today in regard to that. Certainly, there are other initiatives within the industry that are looking to do it, but this is really going to be our effort to try to build a whole equity side as well.
Now, one of the drawbacks of the original MPI that people criticized was that it wasn't investable. And
Mhm.
so along came Odyssey, and all of a sudden there's an investable index. Will this be an
Correct.
investable index as well, to the extent
Yeah.
you could build an index product against it?
Yeah, yeah, absolutely, right? Because all of it will be clear. So, Odyssey can be investable because you know exactly, what the allocation is, what the leverage is, cash holdings, all of those different things. You can actually see the tangible investment and what it would potentially look like. Same would be true on the debt side.
And you mentioned that it's complex. It's a little bit more complex perhaps than equity. And what are some of the complexities that you've had to deal with and address
Yeah,
and get some consensus built around? Because I imagine that there's been some hefty debates about how to treat some of these issues.
yeah, yeah. Well, I mean, you'd be surprised how long we debated even what to call it, core versus moderate versus high, right? Being a membership organization. I always tell people it's the greatest benefit and it's the greatest burden because we do have to work with everybody and we have to listen. We have to try to build that consensus. So we've debated a lot. We can talk about the name, but we've also talked about just to what level do we take leverage inside of these funds? We've debated just a couple basis points. Should it be 70 or should it be 72? Should it be 75? Right? So we work through all of those things. And then the debt structuring is a little bit more complicated. You've got first loans and all sorts of other different layers of debt, each with a different level of risk. So, how do you categorize those and how do you build consensus and get comfortable around that? Because a lot of these debt managers have been working or been managing these funds for some time, and they each have their own strategy. Obviously, bringing them together is always a little bit of a challenge as we start a new endeavor.
Do you anticipate that more funds will join the effort and start contributing data to the
Yeah,
over time?
Yeah, I think so.
That's
We've
what happened.
started to
That's what
see a
happened.
lot of interest actually, as we've gotten better about communicating, and even the managers and the investors are understanding what's going on. We're actually seeing some managers come to us wanting to learn a little bit more. So we're happy to share our template, the data that we're looking to capture, and we're happy to work through anything to kind of bring people along.
Is there information up on the NCREIF.org website now about the index, or is not you're not quite there yet?
Yeah, we're not quite there yet on the public side. On the membership end, we do have our products posted because we are providing a member report. But really, if there's interest, they should just reach out. They can email or just call the office, one of the two, and we're
Okay.
happy to get back with them.
Anything else to talk about with respect to where you are with the index? What's the launch date? When will you really be officially operating
Yeah.
beyond the
So
beta phase, right?
yeah, so the goal would be to have actually the first release of the index by the end of the year. We're actually starting the process now to working with those data contributors to start to get that initial set of data. The challenge with the first round of data is we have to capture some historical data, right? When we release an index, while the current quarter is important, the real value is understanding where we've come from and how it's performed over the last few years. So we are trying to capture a couple years worth of returns. We'll put all of that together, and the goal then will be to release that by the end of the year.
Okay. And how plugged in is the academic community to what you're doing? I know some of your membership are academics, but there's organizations like American Real Estate Society, American Real Estate and Urban Economics Association, others that could use this for research and
Yeah.
developing research initiatives, RARI and other organizations. Are they
Yeah.
on board? Are they aware of what you're doing?
Yeah, some are certainly aware from some of our communication. And then we have a large academic membership of around 65 or so. And we've actually talked to a few of them that are interested in starting to do some research. The challenge there is we still need to build a little bit more depth in our data to allow them to do more thorough research. But they're trying to understand what we have, what's out there because to the point of your question, I mean, NCREIF is foundation is almost built around the academic side, and having that research and having that all vetted through the academic community is important to us. So we're more than happy to work with them, and we're starting to get that message out.
Terrific. And then how far back is the data series going to be going for its inception? What's the initiation of the data series?
Yeah, so the index will be probably 3 years. That will be the initial start. As that gets going, if we feel there's value in going further back, we'll probably capture another 3 years. But the inception will most likely start at 3 years, and then we'll try to go from there.
And is that, do you think, going to be enough to, or it's a starting point, right?
It's a starting point. Yeah. I mean, the real goal here is to build momentum. 3 years, gets momentum going. We have to get in that frequency of collecting data on a regular basis, make sure that there's value there, that the managers continue and want to continue to report on time and accurately. As more value is driven from the product, oftentimes we then say, okay, let's go back and get even more data.
Now, I would
So
imagine,
it's a
I would
balancing.
imagine some of the people that are, because when we look at our fund database, IREIQ, there's hundreds of debt funds.
Hmm.
So you're starting with about 17, you said?
Yeah, it's on the open-ended side, starting on the open end.
Yeah, and that makes sense. You want an evergreen type fund to
Yep.
be able to provide that kind of data. Do you see this being an attractant for bringing in new NCREIF members? Because there are a lot of existing NCREIF members now have debt funds, but there's also a lot of folks that have
Yeah.
traditionally been just debt and
Yeah.
haven't really been part of NCREIF, right?
Absolutely. Certainly from a membership growth perspective, it's an opportunity for that very reason. NCREIF has lived in the equity side for the last, 40 plus years. Moving to the dead end, there's a whole nother world over there. And it's a rather large world, many of which are not NCREIF members. So, we've had a couple conversations with just true traditional debt managers. All they're doing is debt investments. So the process is a little different. We got to teach them, who NCREIF is. We have to make sure that they trust us. Sending data is can be a complex process for a lot of these managers. And then more importantly, they're putting the trust in us to hold it from a confidential standpoint. So that takes a little bit of time. But once they start to understand who we are, what we're doing, and ultimately the value we're trying to provide, we have seen some new members come along, certainly.
I mean, we haven't talked about this before, you and I, but probably what we should do is when you get ready to launch, is do a webinar so that people can call in and ask questions,
Yeah,
questions answered, and that sort of thing.
happy to do that for sure. Yeah, that'd be great.
Let's move away from the debt index, which is an exciting new development. I know
Yeah,
it's in the works for a very long time. And talk about valuation. Valuations have been a big issue on people's minds. The disconnect on the open-end fund side with the huge queues and that sort of thing. A lot
yeah.
of people interpret that to be a reflection of a mismatch in terms of valuation practice catching up with market realities. What is NCREIF doing in the area of the valuation issues? To help-
Yeah, so I mean, certainly we hear a lot of the challenges over the last few years that have come with the valuations and just general practices. We're looking at it. When we looked at that, we said, what can we do to kind of help the industry and try to not necessarily resolve the problem, but to assist in trying to get the industry comfortable where they are. We landed back on what we've been doing for years, which is just provide more transparency to the industry to help them understand what's taking place. To do that, traditionally, NCREIF has always captured, performance data as of quarter end. Now, what we're going to do to help assist with that valuation is we'll start collecting forward-looking data. We're talking about discounts rates. We're talking about terminal cap rates, going in rates. We're also looking at the 3-year and 10-year market growth, and we do have plans to also work on contract and market rent. So being able to capture that data on an individual property basis and then provide those aggregate numbers back to the industry will give people a sense of what's taking place inside of the valuation community.
And
Uh,
are coordinating with members of the valuation community to help them understand the availability of this kind of data?
Yeah, yeah, absolutely. So this has been really member driven. Started from the valuation committee. So they recognize the need and they've worked with us and they've been spectacular in kind of laying out here's the data that we need, here's the definitions. They've done a real good job from a communication standpoint, and then we're just getting ready to advance and collect even more data associated with it. So Today, we just are collecting the data for the 25 Odyssey funds, but we're going to start to expand that to all open-ended properties. That will get us close to 6,000, 6,500 properties each quarter. It's going to take a little bit to get there. The valuation data, sits outside of the normal collection process that these managers have in place today. So it'll be a little bit till we get there, but our sense is over the next, 6 to 12 months, we'll have a very robust valuation report that will allow the members to see exactly what's taking place.
Great. Good news. Then another issue um, revolves around the issue of property subtypes. And recently, NCREIF kind of reshuffled the deck amongst Odyssey funds, reclassifying some property types that have been other, some that have been part of office now is not part of office, and
Yep.
person, and that sort of thing. Anything else going on in the property classification, subtype classifications?
Yeah, I think the big one is just piggybacking off of that. You could make the argument either, Odyssey drove a little bit of this, or the NPI drove a little bit of the change, or probably a little bit of both. But the NPI, as we know it, has always been five property types, the traditional five property types of apartment, industrial, hotel, retail, and office. With all of these new subtypes, we started to ask ourselves, well, what should the NPI be? We were excluding property types from the NPI that were, frankly, more mature than hotel, right? We only had a couple hundred hotel properties, but self-storage, for example, has grown quite a bit over the last couple decades. Senior living, all of those
Yeah,
types of property types
student
needed
housing.
to be in there.
Yeah,
Yeah. So we adjusted that. The NPI now is in a transition. We're calling it an expanded transition, where we're producing the classic as well as this expanded. But Q1 of next year, the NPI will be frozen into just the expanded state. So the history will now include self-storage. It will include the seniors, life sciences, single family rental, all of these new subtypes and property types will now be part of the index.
interesting. And what you're doing essentially is simply reflecting the changes that are happening in the underlying portfolios of investors as they start to get a little bit broader in their viewpoints on what constitutes institutional grade property in today's marketplace.
Yeah, absolutely. We need to make sure we stay aligned with what's taking place.
Now, when NCREIF first started, it was really focused on US property, but investors today are global in their orientation. What has NCREIF been doing in that area?
Yeah. So our global efforts have expanded quite a bit over the last several years. So in Europe, there's an organization called INREV, which is very similar to NCREIF, and Asia has ANREV. These three organizations are, with the three of us, have been working to develop a suite of products that allow both, not only just our members and their members, but the larger global community to understand what's taking place. So we now have a few different products that we build with our data and their data. So we have the Global Real Estate Fund Index, which we call GREFI. We have a global IRR index where you can see inception IRR returns by vintage year. And then the last couple of years, which we're quite proud of, we've launched a global Odyssey index. Similar to the US, both Europe and Asia have an Odyssey index. And all of us are very, very close in how we tailor our inclusion criteria. So it's pretty close to a global peer set. Certainly still some differences, as the world is not perfectly standardized, but it does allow us to see what's taking place from a global Odyssey perspective. And then ultimately down the road, there's a couple different things going on. We talked about the standardization. We partner with them as well as with PREA to do global reporting standards. So some of these things will start to flush out. And then we're also talking about doing a global property level or global asset level index. Again, similar to us, Europe has several thousand properties and Asia as well. Putting all of that together would really give our members and the industry, a good view into what's taking place from a global perspective.
Interesting. So, what's going on from a perspective of at the committee level? I know you've got a lot of different committees and they're working on a lot of different things. And part of the reason we're doing these podcasts, is to help people understand all the
Yeah.
incredible amounts of work that are getting done behind the
Yeah.
scenes for the benefit of the entire community. You might not be aware of it, but it's helping you, right?
Oh, absolutely. I mean, we can't do, what we do without the committee help. I tell people all the time, NCREIF, while I'm incredibly proud of the staff, we're only 14 people. We can't do what we do without the work of all of those committees. So there's a variety of things taking place there. Piggybacking a little bit off what we just talked about with the subtypes, our research committee is always looking at different data. And one of the things that they're talking about right now is industrial outdoor storage. That is, a growing asset type and or sector, and we want to make sure that we can appropriately categorize that. So we're working through how do we identify those properties, and that'll be another field. So there's plenty going on there. We have an ESG committee. ESG has been an interesting term for the first 7 months or so of 2025. So we're doing a couple things there. One, we're really looking at the mission and saying, what are we trying to accomplish? There's discussion around, maybe we just need to focus on sustainability. That seems to be where the effort needs to be. It needs, there's a lot of value there. A lot of the managers are still tied to understanding that. So I think we're going to change our mission and probably the name to more of a sustainability committee. And that committee is going to look at inside of the reporting standards, there's sustainability and ESG KPIs that have been in place for a few years now. What are the KPIs that should be reported to the investors from the managers related to sustainability?
And
That group's going to look at it and say, what makes sense today?
how are you walking the line between what you're doing and what GRESB has been doing? Because GRESB has kind of emerged as a standard for
Yeah.
sustainability, ESG related data. Um,
Yeah, we stay pretty arm in arm with them. We talk with them on a fairly regular basis, trying to understand what they've got going on and figuring out, what we can leverage from them, and frankly, what they can leverage from us. There's talk, although we haven't gotten there yet with the committee, about potentially doing like a GRES Odyssey index. What do just the Odyssey funds look like inside of there, or just open-ended funds, and maybe even combining data where we can combine performance with some of their sustainability metrics and really try to build a value add. So we're not there yet, but it's certainly on the horizon, and this committee would be pretty important to help us through with that.
okay. Anything else noteworthy we should be talking about right now?
I think that probably covers a lot of the industry initiatives. I mean, the other thing that will be big for NCREIF and our membership over the next year is we are getting ready to roll out a brand new technology platform. Um, so brand new submission system, brand new output, brand new member area. We're going to start to leverage more dashboard capabilities, more API capabilities, and try to slowly move away from these large spreadsheets that we continue to produce each quarter. It's 2025, soon to be 2026, and there are better ways to deliver and distribute data. We'll start to leverage a lot of that. And then phase two will cover the fund side. We'll do more on the attribution front, and then eventually the goal is to get into member personalization, portfolio metrics, portfolio dashboards, and really start to, today we have all of this data. We got to do a better job delivering it. And that's the main goal of the technology project. So the members should expect to hear a lot of that over the next several months as well.
And what's the thinking around AI? Is that something that you guys are trying to integrate into this whole process?
Yeah, to some degree. We're looking at it from a couple different perspectives, similar to a lot of other organizations, right? So internally, we're trying to understand how we can leverage it. We're thinking about, can we leverage it to do data validation? A lot of the data validation that we do today is via spreadsheet or programs or finding outliers. There's probably opportunity there. The other side is on the member end. So one will do like a self-store, like a AI chatbot just to help with just general support, which is fine. But then the other area that we're trying to figure out where there could be value is almost like an AI query tool. So today, if you wanted to understand what was taking place for Chicago apartments, you need to go into the query tool. You need to select Chicago. You need to select apartments, and you got to know how to do that. The theory would be you could type in, show me Chicago apartment returns for the last 5 years on a quarterly basis and annualized basis, and that should be able to be provided back to you. So simplicity around querying the data, we hope to leverage it as well. The foundation of AI will be built. We're leveraging all of the Microsoft technology, so we'll have it there. But the first thing we got to do is get everything migrated to their new platform, and then we'll start to build on it.
We're doing the same thing at our company, so it's a
Yeah,
big task. It's like you got this data, but you got to get it ready for prime time. You got to
yeah,
get
yeah,
ready
yeah,
to work within the confines of how the technology works. But it's
yeah.
exciting because when you get to natural language querying, it just makes everything so much more
Oh,
accessible and faster to everybody.
so much better.
Yeah.
But to your point, we got to be set inside, and we need the technology. We're also going through a SOC 2 compliance, so we're making sure that we're both prepared not only from a technology standpoint, but process, data access, security, all of those things.
A lot of stuff that needs to be done to lay the groundwork.
Yeah.
All right, Dan. Well, thanks for taking the time out of your busy
Yeah.
schedule to spend some time to share this kind of information with us. I hope it's helpful to the people tuning in, and we'll do this again next quarter. I'm sure.
Awesome. Thanks, Jeff. I appreciate it. Always fun.
Take care.
Bye bye.
Bye-bye.